Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Dakota Gold Corp annual report. Dakota Gold Corp offers a range of services related to mineral exploration and development. At its core, the company provides mineral acquisition and exploration services for gold deposits. This includes holding interests in various properties across the Black Hills of South Dakota. Some of the specific businesses and services provided by Dakota Gold Corp include mineral property development exploration for gold deposits, property management through surface leases and / or ownership acquisition of new mineral properties. The company's portfolio consists of several key projects, including Blind Gold, City Creek, Cambrian Unconformity, Tinton, West Corridor, Ragged Top, Pullman Anticline, Maitland, South Lead / Whistler Gulch, Barrack Option Property, and the Richmond Hill Project. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. One significant driver is the successful completion of initial assessments, such as the maiden SK 1300 assessment for the Richmond Hill Gold Project. This type of evaluation provides valuable insights into the project's potential and can significantly impact revenue projections. Another crucial factor is the ability to raise capital through public offerings. The company's success in closing a public offering that raised net proceeds of approximately $32.8 million demonstrates its capacity to secure funding, which can be used to drive growth and expansion. Furthermore, the subsequent public offering on March 25, 2025, which raised gross proceeds of approximately $35.1 million, highlights the company's ability to attract investors and generate revenue through these means. These drivers are critical in determining a company's revenue trajectory, as they directly impact its financial capabilities and growth prospects. By successfully completing assessments and securing funding through public offerings, companies can position themselves for sustained revenue growth and increased competitiveness in their respective markets. The financial performance of the company has been a subject of concern. One key indicator that highlights this issue is its operating cash flow. Unfortunately, the company is generating negative operating cash flow, indicating that it is not producing sufficient profits to cover its operational expenses. This trend is evident in the net cash used in operating activities for both 2024 and 2025, which shows a significant outflow of funds from the business. The figures for these 2 years are minus $31,478,407 and minus $25,445,427 respectively, further emphasizing the company's struggle to generate positive operating cash flow. As a result, it can be concluded that the company is not generating sufficient profits to cover its operational expenses, leading to negative operating cash flow. This situation may have significant implications for the company's long-term sustainability and financial health. The company's debt level and interest expenses have undergone significant changes. According to the financial reports, the total liabilities increased from $3,201,580 in 2024 to $3,337,411 in 2025. This represents a slight increase of approximately $135,831. However, it is worth noting that the company's debt level has also been influenced by a specific agreement with VMC. As of December 31, 2025, the total liabilities stood at $3.3 million, which is higher than the approximate $2.9 million recorded as of December 31, 2024. In terms of interest expenses, there has been a significant decrease. The company's interest expense decreased from $137,483 in 2024 to $0 in 2025, representing a minus 100% change. This substantial reduction in interest expenses is likely due to the company's efforts to manage its debt and optimize its financial performance. Overall, while the company's debt level has increased slightly, the significant decrease in interest expenses suggests that the company is making progress in managing its finances effectively. Management at the company is optimistic about its future prospects. They plan to build upon the historic efforts of the Homestake Mining Company from the 1990s by consolidating mineral potential within the Homestake district. This involves expanding the portfolio of brownfield properties, which will be a key focus area for the company in the coming years. The company's strategy is centered around advancing individual projects, with a specific emphasis on the Richmond Hill project. In 2026, they plan to advance this project through feasibility studies, permitting, and technical de-risking. This will involve refining the mine plan, improving resource confidence, and conducting extensive drilling campaigns to support feasibility-level engineering and economic analysis. Management is committed to managing expenses effectively, particularly variable exploration expenditures. They intend to retain all future earnings to fund business growth, indicating a cautious approach to financial management. Overall, the company's outlook is focused on steady progress and strategic development, rather than aggressive expansion or rapid growth. That concludes the financial summary. For Dakota Gold Corp, feel free to comment below, and I will be happy to answer them when possible.